In the short term, yeah, absolutely. I mean, we're excited. We're excited to make some money. More money in the system pushes asset prices up. Sucks if you're a salary slave because, well, it's going to inflate away your earnings. But because the banking system is showing cracks, that's why they are pumping this money in there. So there is a negative reason for the positive money printing. Humor me for less than a minute to explain how banks actually work, because it isn't intuitive, it isn't logical, and I think it's really, really important. And then we go into these massive IPOs, and then we go into how do we position ourselves for that. So once you understand this, all of this will click into place. Let me ask you this. When you deposit, say, $100 into your checking account, big investor you, where does that money go? Well, most people think it sits in the bank's vault or something, right? Yeah, it's my money. The reality is it is not your money. The bank immediately lends the money out to somebody else. That $100 goes to someone else. They now have that $100. So imagine, let's break this down and even simpler. Imagine you give your friend Sarah $100 to hold for safekeeping. You have $100, right? She says you have $100, but Sarah turns around and she gives $90 of that to your neighbor, Tom. I should probably write this down, shouldn't I? So you give $100 to S, Sarah. She gives $90 to Tom. Now, something magical has happened. You still have $100 in your account with Sarah, right? You can check the piece of paper she gave you, which is what the banks do. Tom has $90 cash in his pocket, which he can actually spend. So the total money in your neighborhood just grew from $100 to $190. Do you follow? Do you follow that system? This is called the fractional reserve banking system. The bank keeps a teeny tiny amount of money, the fraction of your money, and they lend out the rest. Now here's the wild part. Since March 2020, US banks have been required to keep 0% in reserves. Zero. Banks can legally lend out every single dollar you deposit. Now, you're probably thinking, wait, if the bank lent out my $100, what happens if I want to withdraw it? That's the question. Bingo. The bank is betting you won't. They're betting that on any given day, only a small percentage of people will want their cash. And they're usually right. But what if everybody wants their money at the same time? What if there's a panic? Well, that's called a bank run and the whole system collapses. You might remember Silicon Valley Bank from 2023, which was not, a long time ago. This is less than 2 years ago. Tech startups got a little nervous. They started withdrawing deposits. The bank didn't have enough cash. They had to sell bonds at a loss. Word spread on Twitter. It was still called Twitter back then. More people panicked. The bank collapsed in 48 hours. That was the 16th largest bank in America gone in 2 days. So why am I telling you this? Am I just spreading fear and that sort of thing? No. But the Fed printing money, $40 billion, is not about helping the economy. It's about preventing bank runs. It's about keeping enough cash in the system so banks can meet withdrawal demands. Now, how does this work? Okay. So the Fed prints money, the green stuff, right? What happens with that money? It goes into banks' reserve. The banks therefore feel safe, and they're going to obviously do what they do. They lend the money out, or, short silver. So what happens? There is now more money about. What happens with more money? There's more money about. Well, asset prices go up. Money will always seek a return, so stock prices go up, real estate goes up, that kind of thing. So the stock market rallies. What happens when the stock market rallies? Well, IPOs, founders and investors are rushing to IPO at the top of the market. And that's exactly where the story is going. And that's exactly how we figure out where we want to be more cautious and where we want to take less risk in this year. Even it's not the coming year, is it? It's this year. Winston says you don't even know what time of the year it is. I know. Okay, before we jump into the $1 trillion IPO frenzy, I'm going to do something even better for you. We're going to run on the coming Saturday, I think it's Saturday,